What's up everybody, Tom here with another video. What can I say? Last week was another weird week, but amazing week for the stock markets around the world. We'll be taking a look in this video at our technical analysis levels for the S&P 500, Nasdaq, gold, Bitcoin and more to try to find out what it told us about the coming week and also some of the news events that we need to be watching out for. Bitcoin just hit an all-time high. Are we going to the moon? Stay tuned. All right, well, one of the best places we can start when doing analysis for the stock market is to understand that the market sectors that were moving and also the stocks that were being hit and the stocks that weren't being hit. Let's take a look here. So we had Apple, Microsoft, Google, Facebook, and Amazon all having relatively weak days on Friday. So those FANG stocks, including Netflix, didn't do so well. What's happening on Tesla, though, has me very interested to continue to watch that chart from a technical analysis perspective, and we will be doing that throughout this video. When we look at the actual markets for the day, they started with a little bit of a bang, not that much, and then declined through the Friday session. And what is this telling us? It's saying that people had, let's call it the paper hands, and they weren't necessarily sure about the bullish actions into Friday. This is being contrary to what we've seen generally during the last couple of weeks. We've seen stronger Fridays. This was the first one we had actually a negative day, led by the Nasdaq, as tech stocks are the ones that are in focus right now due to valuation concerns and of course those treasury bonds as well. Let's take a look at the sectors that did well. So we did have some sectors, materials, energy, still doing well in the recovery, also financials. As we expect, these particular value sectors are going to continue to hold up probably for the next 1 to 2 months, and then we think they're going to actually stagnate for some time. But let's get into the technical analysis here because that's what we're all here to talk about. And we'll start with the Volatility Index. The Volatility Index 20, of course, was reached. This is an incredibly important line. You put this throughout all of time of the VIX. And when we're under 20, we're in a normal volatile situation. And when we're over 20, we're in an extreme volatile situation. So we're still in the extreme volatile situation. As I said to the guys in the stream last week when we were doing the streaming, we're going to set alerts for above 24. And we're doing that because when this market closes above the 24, let's say we get a candle above here, what that's going to signal is further fear coming in. 27.5 seems incredibly likely at that point, and possibly even a spike back to the previous highs here of the 37.5. So 24 is a level I'm watching, and of course 21 and 20. At this stage, coming into the Friday close, we had 22.1, which is not really in doing anything for us. We're not sure which way just yet from the VIX. Dollar index, another one that we want to be looking at, whether it's risk on or risk off. The dollar index, you can see on the 1 hour here, went all the way up, hit the 91 resistance, and then went all the way back down to the 90.20. If we take a look at the daily here, you'll notice straight away that it's really stuck in the middle of nowhere land. And I think until this week, we either see a close below the 90 or close above the 91. I'm not too interested other than maybe scalping and day trading in between for dollar index pairs. It's also giving us no clear direction other than the overall trend on something like the weekly is of course down. We know that's down, and we know that it also hit our 20 moving average on the movement down as well. So it is looking short, it is looking weak, but it's still stuck in the middle of nowhere for now. Bitcoin, of course, the rise of Bitcoin, the movements here have been extreme. You'll just notice that it dumped off a little bit, which is probably a healthy Bitcoin cycle. Now, I was going to mention the 20 moving average, but you'll see it's already hit it. So this is the 4 hour here, and notice how this 4 hour has been such an amazing buy zone for Bitcoin all the way through this last run up, just under around that 44,000 to these all-time highs here at the 57-ish. These areas, the 20 exponential moving average has continued to hold. So what am I looking for this week? Continue to hold this zone. Now, if it doesn't and it closes underneath, what's that telling us? Back down to the 50,000 most likely for something like Bitcoin. That's the flash that if it closed under there, it's signaling more selling pressure. And probably this will happen as all cryptocurrencies tend to pull back at some point with a 20 to 30% pullback. We haven't seen one in some time since that 40,000 into 30,000, 28,000 zone. It's very normal for Bitcoin to have those flash crashes. So if you've just gotten into this, you're in ADA, you're in ETH, you're in XRP, any of those others, please be aware that there is these pullbacks and they are very, very intense when they do happen. Let's take a look at the metals now. We'll talk about silver to start with. Now, silver is an interesting one because silver dumped down to the 26 support, and you'll notice here on the support, it was bought off very aggressively. I tend to think this was a manipulation that happened right around the market close here, and it was quickly bought up. And this could have been trying to get silver more in line with, of course, where gold is right now. And gold looks really unhealthy when compared to the silver chart. 2780 still a zone. I'm looking for closes above to signal further buying momentum. Why is that such an important area? Every time it's closed above 2780, it's tended to go towards that magical zone of just underneath $30 for the ounce. Now, that's something I'm definitely going to continue to look at over this next week. For now though, unless you're in long positions, it is a murky chart, prone to flash crashes, prone to some problems. We had that trend line. You'll notice how it interacted with that trend line over time. Let me just poke that out. But at this stage, yes, even if it came back up, look at the resistance it's going to be finding from that trend line and from the 2780. I think silver's in for some troubles, but if it gets through 2780, we're on and we're ready to go to that $30 zone. Gold, what's been happening there? Bit of movement up after hitting those lows of 1760. We know the weekly support's about 1765. So let's go to the weekly first to have a find out whether it closed at the right zone. I'd argue it closed right around where it had to try to hold up. Weak rejection all the way down, the lowest point we've been now since June last year. Then it bounced back up and it closed right in this zone where previous closes were and the wick was from February. If we go to the daily now, you can see some structure is forming, some rejection candles followed by some weakness here. And then we go to the 4 hour and all of a sudden we're starting to get some structure. We've got a trough, a lower trough. We've also got the peak here and we're putting pressure under that peak. Now, for me to go long on this on the smaller time frames, I'd want to see a peak break. I'd then want to see a pullback to that. Notice how there's support over here as well. So then we'd have support, resistance, a 20 moving average on a significant time frame such as the 4 hour, and the pullback back to this would then allow us to take it back up to this area here, which is just underneath the 1820. So for day traders, that's something you might be looking at, but countering this decline in gold can be very, very difficult. For people looking for the short, anything breaks under 1760, 1740 is the next target, and then 1700 after that. There's a lot of structure on the far left-hand side on the weekly that I think is worthwhile looking at. But gold certainly looks weak for now and may only have a little bit of spurts in it. We'll have to keep looking at gold this week to get more of an idea of what's going on, and definitely subscribe to us if you want to come and visit our live sessions for, of course, the start of Monday and other videos we put out during the week to do with these markets. Now, Tesla, let's get into the stock market here. What's going on with Tesla? Finally a bearish candle coming off that 800. So we kind of talked about this on the stream. We certainly said that Tesla was looking weak with a series of lower highs coming into this support area. We now have a daily bearish candle for the first time. We had a bullish gaps below, bullish movement. Gaps below, bullish movement. Now we've had bearish movement off the 800. What does this mean for Tesla holders? Well, it's the first bearish signal that we've had on Tesla in a very long time. And I mean literally since the pandemic. That's how long it's been. If we take the distance of a channel, we extrapolate that out, it pushes towards the 700. I tend to think it might go even lower, but this is kind of signaling, yes, Tesla is looking short for the first time. The 20 and the 50 across now on the 4 hour. This is the exponential moving averages. All of these wicks have been tested and we've got a close right on the low of this wick and underneath this other one. So things are looking pretty bearish right now. I could see this very easily go here. And remember, Tesla is about, I think, 4 to 5% of the Nasdaq in terms of weight. So if this stock starts to sell, it could have a lot of effect on the rest of the Nasdaq in terms of sentiment for the week. the channel is in play, it looks like, from now. Let's take a look at Apple. We've got the multi-trend lines here. The trend lines coming from the pandemic lows and also the trend lines coming from the November lows. And both of those have now been signaled as a fall against. We saw Buffett, Vanguard, all of these big big Apple holders selling a portion of their stock. Not all of it, just a portion, trimming up their orders. And now we're thinking 125 might have some support for the week ahead. But if we break through here, we could be going down to some serious value into the 115 and the 110. Now, if you look at earnings per share for Apple, you look at some of the metrics, it makes sense that this stock needs to decline. Remember, it went from 1 trillion to 2 trillion plus in literally under a year. And that's hard to consider because it is $1 to $2 trillion. I think sometimes we forget how crazy things got over the last 12 months in the stock market. I could see this easily declining past 125 back to every $5 chunk. So basically every $5 should be acting as some form of support or resistance for Apple. That's pretty common with this stock and definitely worth considering. Let's have a look at the SPX. So the SPX trend line here on the weekly, still holding. We go to the daily, still holding. This has been incredibly good for us as a TA analysis tool. You'll notice that we did not close underneath these wicks. So where did we close? 39.06. Aftermarket was about a 39.02. If we actually take a look at this level, this is everything for the market right now. 38.85 rejection zones on the SPX. If we close below here, I do think we go back down to the 3800 at least. And we've talked several times about how the 3600 becomes open due to the Fibonacci correction pullback and the previous resistances. So these zones are very much open here if we close underneath these wicks for the week ahead. Now, if we continue to move up, 39.40 is the zone I'm looking at for a close above, and that will signal going back into the trend line and slowly grinding higher, potentially towards the 4,000. Let's take a look at the 1 hour here though on the SPX, as I want to show you where the market opened yesterday and the trend line that I was looking at with everybody on Friday before the open. So it was this one here. Basically, we had a series of little peaks, lower highs coming through. I thought that the market would open around this 39, 25, 26 zone. It certainly did. It basically opened straight on that, and then it started selling off. Remember, 19th of February last year was actually the date that the market started selling off. The 19th of February. Go have a look at it. We can do it right now. We'll go to the weekly here. Or actually, we'll go to the daily. We'll zoom it out. And look at this. 19th of February, and then the sell-off happened. Now, that's got nothing to do with TA. It's just more of a coincidence, but it's strange that it's all happening around the same time. It just shows you that Feb into March can be quite weak, but April is traditionally a very good month to be invested in the stock markets. So for the shorts this week, 38.82, look for closes below that, and then probably further shorting to appear. Especially look at the Tesla and Apple charts. Remember, Apple's about 11% weighted to the Nasdaq as well, so it will really push it around if it continues to fail. 125, etc., all very important levels for that. Here is the S&P 500. You'll notice it closes here at 39.03. I think it was actually 39.02 at one point on the tick, depending on the data you're using. If you think about the futures, some people would say that's a left hand, that's a head, that's a right hand shoulder. Now, I'm not going to say that, because the problem with this is that if you're considering left shoulders and right shoulders, the right shoulder should always be lower than the left shoulder to show momentum towards that direction, in this case, the downside. But you do have a very strong neckline through here, and that's again that level we saw on the SPX, and it all pushes towards that 3,800 criteria. Underneath that, of course, 3,600 is the zone and the target. Here's the Nasdaq, the same thing. This one looks a little bit more like a head and shoulders because we've got that right shoulder that's weaker or lower than the left shoulder. There's the head. You have a very clear neckline through this zone. You'll notice we've drawn that up here. 200 simple moving average on the 2 hour. Everything is about Monday's close. What if we close underneath here? Then we go bearish. What are we doing from the bullish side? Well, we want to see bouncing. We're going to see a takeout of this area here. I'll give you the zone there for that. That is a 13,730. We break close above that. All of a sudden, we go towards 13,9, possibly 14. So this zone here for day traders, important, 13,735. And for the shorters, we're all around here saying we need a close, we need confirmation, and that weakness should open the floodgates for further pressure from the markets towards the downside. What else is going on this week? Well, of course, we have Japanese bank holiday on Monday. We've also got Fed Chair Powell testifying on Wednesday, and we have Fed Chair Powell testifies again on Thursday. Now, these times will be for me in Australia. So remember, forexfactory.com or MarketWatch, go there, set it to your time frame, and then you'll be able to see when all of the most important bits of news are coming out. Just a quick reminder as well, if you haven't already, consider following us in the links below to TradingView. It's really helping us out. We're getting towards 1,000 users. We're only at 1 a few weeks ago, if not a week ago. So thanks so much for the support there. Come join us Monday, 10:30 p.m. Australian Eastern Standard Time. If you subscribe to the channel, which I hope you guys are, then you will see that alert come up. I'll post it on Monday with, of course, all of the details. Thanks so much, guys. Have a great week, and hopefully you make as much money as humanly possible, but of course, practice that risk management. Bye for now.